Hey guys, welcome back. In today's video, we are going to be talking about why price can't be held down anymore, how shorts are now scared to short AMC, AMC about to explode, and many more in this video. First, we're taking a look at this. It's interesting to see AMC shows promote the decline of share price since 2021 as an argument why AMC apes have lost, while it's actually the totally other way round. The price decline without a corresponding retail sell-off is what built up the pressure in need of release. And so once again, recently we're seeing this increase in FUD, and we've already addressed it so many times from every perspective possible, where you take a look at the fundamentals, the sentiment, the overall macro, right? We're looking at how they're just making up false claims to say AMC is a bad company without actually any substance or context behind it to support their argument. And then a further thing to look at is about understanding that as we see the price going off, but yet we don't see the OBV going down, aka we're seeing no one actually selling, that just shows how much pressure is being built up. The reason why we say that the AMC exit price, the AMC floor price, the AMC squeeze price is increasing day by day is because the further we see the price of AMC dropping down without actually seeing any real selling with people who actually hold shares of AMC, that's just showing that there is even more synthetics being created. And you can take a look at it for pretty much anything for AMC. Essentially take a look at a particular range of the price decline and then take a look at the OBV in corresponding to that. What you will likely see is that the OBV barely changes, yet we're seeing the price drop over. And you can take a look, whether it's over 40%, whether it's over 30%. But when you take a look at the OBV, it may only be a difference of 2%. And you can ask yourself the question, is 2% of people selling their shares really going to have an effect on the stock to drop it 40%? Well, the answer is obviously no. But then we know that precisely because we see things like that it's happening, we know that pressure is being built up. And we know that from there, we're going to see how AMC's explosion is going to get higher and higher. It's how we know that there are more short capital trapped every single day as they build this pressure. Is why we know that the squeeze price is getting higher by the days as we see him building up more pressure. And then you can see AMC presently trading at $2.91. This is ridiculously suppressed, especially given the latest news of late. It cannot be held down. Apes are buying like mad. Might we see a late day pushback of $3 to crush put bias? So firstly, we talked about it, the fundamentals, right? And if you guys want to take a look at somewhere else, whether you guys want to ask AI or ask other people, take a look at the fundamentals of AMC and understand its projections, understand how it's growing, understand how it's operating, and you will understand why, firstly, the recent price action doesn't actually reflect AMC's fundamentals. But then furthermore, it's about the actual price of AMC doesn't reflect where AMC should be. We see AMC improving, we're seeing how the box office improving. When you take a look at Cinemark, when you take a look at IMAX, you're all seeing how their shares are going up because people see the opportunity within this industry and they're buying shares, hence why the share price is going up. Now, the same applies for AMC as well. Seeing the fact that AMC is the biggest company within this industry, you understand that people view AMC as a good opportunity as well, and they're buying into AMC shares, yet we're not seeing the price going up. And that itself is already a suppression. Now link it with the OBV, the selling we said at the start, and you understand how this obviously works together. But then it's talking about, and make sure you guys check out the previous video, so yesterday's video, which we talked about how these guys are slowing down on their algorithms. Now, further on in this video, we're actually going to be talking about another reason why they're slowing down their algorithms, why they're scared to short AMC. But yesterday, we've already talked about that we're seeing a decrease in the leverage, in the liquidity, that these guys have in order to suppress AMC. And so if we're seeing AMC go up, we're definitely damaging these put buyers. We're definitely damaging, these guys who've been trying to short AMC as of lately and increasing their position. Now, the ones who have been shorting AMC for a long time are already stuck with the swaps, the FTDs, and so they've always been damaging. They've always, been bleeding out throughout the last few years. Every single day, they're spending money to finance these positions. They're spending money to create more positions. And so we already know that they are, of course, running out of money. And then let's take a look at why they're not willing to suppress AMC to the further extent, and why they are worried about the squeeze price getting higher and higher. So they are not going to sell you AMC and GME for lower prices, because of the fact it will create too much synthetic liquidity. They will have to purchase more derivatives and pay more interest to investment banks. They hope we go away. And so it's why we've said recently, every time they can keep it below max pain, as long as they can keep it below max pain, they're willing to stop their algorithms. They're willing to stop the suppression. And it's what we talked about with the price suppression. They only allow it on the Friday for the price to go up, but they make sure they suppress it just below the max pain. And that is already a sign of weakness from the short sellers. But another reason is because they are too scared to create even more synthetic liquidity. If you guys want to wonder, truly how much synthetic shares they have created, we don't have an exact answer. Everyone should know that. There's no way we can come up with an actual exact answer. What we do know is that they've been continuously doing this every single day for the last 5 years. So we do know that the synthetic liquidity is so big to the point where multiple firms will get bankrupted. Even potentially multiple banks could get margin called as well and bankrupted because of just how big these positions are. And these are because we've seen companies like Archegos going down, and then banks like Credit Suisse going down, and even now as we see UBS taking up these positions, we're very likely to be looking at UBS going down. And so you can understand how this is obviously affecting, and UBS only holds a portion of what exists out there for AMC and GME swaps. And so this is why they're worried to create even more synthetics of AMC. This is why they're worried to suppress AMC, because they understand how much is already inflicting onto them right now. And that's why they try and find other alternatives. They create these FUD news in the hopes that people are obviously seeing these news and then panic and then sell their shares. That's what they are hoping for. But the actual truth is, of course, the fact AIMs know exactly what's going on. We know what we are buying. We know what we are holding. We understand how AMC is working, operating, and we understand how they are improving. And that's why these shorts right now, because they can't get retail to sell, they're forced to obviously do these things that they don't want to, and it's bleeding them even more. And then let's take a look at this, and it's why I think AMC is about to explode, and why I think every other company is going to see AMC as a golden opportunity. So here we can see if the market, which is about 200% above its long-term average, returns to its normal valuation, it could drop by 66 to 67%. That means a $100,000 investment could lose $66,000 to $67,000. And now this is taking a look at all the data points, and which I highly recommend you guys obviously take a look at, so that I don't just talk exactly what's on here. But the reason why this is interesting, the reason why this is important, is because essentially it's saying how the market is extremely overinflated. It means that companies who are at its current price should not actually be at its current price, and the true price should be declined 66% off of where it is. And so that's the problem with the market right now. Almost every single stock is overly inflated and could face a massive decline of over 66% at any moment. And so here's where the interesting part comes in. When you have all of these stocks that are overly inflated, there are only a few stocks who are not. Now, these stocks are already in the minority. But then, if you go even deeper, is that there are stocks who are not only at its normal price, but then even below that price, even undervalued, which of course AMC and GME. And so as we're seeing that we're in the market right now where pretty much every stock that you buy could face a 66% drop at any time, and other stocks are only at its normal value, providing no actual investment opportunity, there are only a few stocks you can buy, which is firstly bulletproof to the massive market drop because it's not overly inflated. Secondly, because it's not even at its normal price because it's undervalued. When you see other stocks drop by 66%, this stock is actually going to go up in those times, which once again, AMC and GME, and of course some others as well. But of course on this channel, we're talking about AMC and GME. And so that's where we are at. and is seeing about the golden opportunity AMC has, along with, you know, these other potential stocks that exist out there as well. And so is why we say AMC is about to explode, because if we're going to see these stocks drop by 66%, we're going to see AMC explode by 6,600%, and even more so because of just how undervalued it is. And that's why we're seeing institutions slowly and quietly accumulating AMC. But yeah, guys, that's it for this video. I hope you guys enjoyed. As always, none of this is ever financial advice, so do say wise, I growing with salt. Make sure to do your own due diligence of research, and I'll catch you guys next time.